Hello everyone, welcome to this video, and this is a standalone video, but at the same time I decided to add it to the series of the weekly Fib strategy that we have been talking about. And today I want to explain to you how you can actually make use of the hidden divergence to enhance your trading enhance your trading skills and to help you position yourself for better entries. Now, if you've not subscribed to this channel, I implore that you do so right now, and also click the bell button so that I can get notifications of when we create new videos in this channel. And I'd like you to understand that we usually create new videos every Monday, every Sunday, every Tuesday, and every Friday. Now on Mondays we put updates for the Volatility 75 and the bull and crash market so that you can know what to expect for the week. Also on Mondays we do the same, which is the weekly update for Bitcoin and Ethereum. Then Tuesdays and Fridays we post strategies that could be helpful for you so that you can profit in the markets. So this channel is a channel made for your profiting, so you will do yourself some good to actually be a part of the community. And if you have any questions that are bugging your mind and you want quick answers to them, you can actually check the description below and talk to me. You can chat me up on WhatsApp or actually call me, and I'll send me a mail and I'll give you a prompt reply. So now, quickly jumping into what the video is about, is basically about the hidden divergence. And if you've not watched the video on divergence, which is very explanatory and in-depth, I advise you go watch it. Just check the description below. You will see the link to the divergence tutorial video, the explanation of the different kinds of divergence and how you can actually apply them. Divergence over the years has been one of the formidable and trustworthy strategies that professional traders have discovered and been using to profit in the markets. Now, divergence is a strategy that could be used in any form of market, be it stocks, forex, the crypto, or the synthetic market, the volatility index market, and futures, whichever market that you feel you want to trade. So now my chart here is based on the weekly Fibonacci strategy, which is the weekly Fib strategy, and it's been a series that we've been working on. And sincerely speaking, this is a strategy that I for myself use, the weekly Fib strategy, and I'm actually giving you an in-depth understanding of how you can actually make use of this strategy. So, and it's been awesome. Sincerely speaking, it's once you see a setup, all you need to do is just to set and go to bed. That's all. Just set it, just place your stop losses, place your target profit, and you're good to go. It's a no-brainer, trust me. I can guarantee a 90 to 95% accuracy of this strategy. So it's a strategy that's going to make you a lot of money, and for a start you can consistently make $20 on a daily basis, because this is the benefit of the strategy. It's a strategy that allows you to make at least that allows you to get at least a trade per day on one single market. So if for instance you trade about 2 or 3 markets, which I advise you don't trade too many markets if you're a beginner. so that you don't get confused while trading. I advise that you actually pick a market, get used to it before you move to the second one, then to the third. And with this strategy, you really might not even need 3 markets. You might just stick to just 2, and you will certainly get a trade per day. So if you have a target of $20 per day, and the volatility index market, for instance, trades 7 days a week, so you're looking at $140 a week. So in a month, you're looking at 4 times 140. You understand me? So, and that means you're looking at over, that means in a week, that means in a month, you're looking at over $500 profit. So the following month, you can actually increase your profit, your daily profit, to $50 because you'll be increasing your lot size. Because I always advise you trade with the risk, with the proper risk management. So quickly now, the hidden divergence is a strategy that allows you to trade along the trend. It tells you the continuation of a trend. So if you want to understand the setup of this my chart and know what I actually used, how I set them up, I advise you just go check the video on the series, the Fibonacci series 1 and 2, so that you can actually understand the strategy and grasp how my chart came about looking like this. So just check the description below and you will see the video, the link to the video of the weekly Fib strategy. A lot of testimonies are coming out already from this strategy, so if you're not trying it yet, then I believe you're missing out already. So now what we need to do is just to, on this chart, you'll be just like divergence is combining the price chart with the indicator chart. So now what you need to do is, first of all, notice the trend of the market. Now the trend of the market is downwards, so that we're only looking for opportunities to sell. So that means we are looking for only hidden bearish divergence. So, and let me give you a cue to this, but I would advise that you go watch the video for yourself. So now, if your market is going downwards, then your indicator is, let's assume that this is your indicator, and your indicator is looking this way. So these are the corresponding levels here, here, and here. So you realize that this has this extreme level here and this extreme level. When you connect them, you can see it's pointing downwards, which is showing that it's moving downwards. But the corresponding level right here on the indicator, which is the stochastic, is pointing upwards. Sorry, this way. So this shows an exhaustion. This shows an exhaustion, and this shows an exhaustion one, and it shows that there's a lot of discount on this market than, sorry, on this level than this level. So this is the bearish hidden divergence. Then for the bullish hidden divergence is similar. You have your indicator, then your indicator is moving this way. So your market is moving upwards, the indicator is showing you this. Don't forget that this level and this level correspond, this level and this level correspond. Then you can see that this is moving upwards, but this is moving downwards. But you can see in the bearish one, this is moving downwards, but this is moving upwards. So you can see the exhaustion. Now I always advise that the later should always exceed. This is the 80 level, this is your 80 level, This is your 20 level. Now this is your oversold, this is your overbought. I would advise that you allow the later to drop below, for the bullish to drop below your 20, which is the oversold level. Then for here also, for the bearish market, for the bearish hidden, I advise that you allow the later to also go above the overbought, which is above the 80 level. So with this understanding, we'll come back to our chart and look for possible scenarios like this. Now this indicator is already below, this pink is already below the white. If you want to know the configuration of all this, this is the stochastic, these are moving averages. Check their configurations. Go back to the previous video, which is the video on the Fib strategy, the weekly Fib strategy. You'll see sales 1 and 2. Try watch them and understand how you can actually use them to be profitable, and also how you can actually add this hidden divergence strategy to the weekly Fib strategy. Now in this scenario, you can see the market is coming down, but right here I can't see any hidden pattern, any hidden divergence pattern forming. So what I need to do is just to let's move backwards. If you can see this is an uptrend actually. So we are looking for the bullish, yeah, looking for the bullish hidden divergence. So you can see this dropped here. Let's look at possible scenarios. Okay, all right, you can see something like this. You can see right here we have something like this, then here we have something like this. You can see this is moving up to show that the trend is upwards, then but the corresponding levels on the stochastic is moving downwards. I can see that the stochastic here dropped below the oversold level here. So you expect that the market will push up. So the market from here pushed up, then you take your profit right here. So let's look for other possible scenarios. Alright. Another thing I would advise that you should try is you could actually try checking this on your smaller time frames, because you're gonna find more possibilities of these setups on smaller time frames than the bigger time frames. Okay, you can see that all along we've not even seen any. This moving up. Okay, all right, I think we've seen one right here. You can see this moved this way, then this moved this way. Yes, now you realize that some of you could say, oh, I didn't just negate what I just said. Okay, yes, I promise you that I should really look out for the later, that if the later crosses below the 20. Yes, but the reason why I would have taken this is because if you notice that though this did not get to 20, but it almost got to 20, you notice that it was between the 50 and the 20. So that was the reason why I considered it. Yep. So let's look for other scenarios. Alright, so if we can get any here, let's come to this chart right here. Let's see if we can see any that we could work with. Don't forget that we're working with strictly hidden divergence. We're working with hidden divergence right here. Okay, let's see. Okay, you can see something like this here. to here, you can see this. Then from here is the corresponding right here. You can see this from here to here. You can see these levels here. You can see this here. So you just place your sell trade here, then the market drops to this level. Okay, let's see if we can see another good one. You can see another good one. Let's see another good one. Another good one. Now, mind you, let me quickly say this. Now, mind you, on your charts, if peradventure this level and this level are above, for instance, you can see this played out nicely, but for instance, let's assume that this and this are on the same level. Then when you draw lines on them, they end up getting a double top like this. Then it's not a sure divergence, hidden divergence. It is not a promising hidden divergence. So I advise that you neglect such. Yes. Or if vice versa, if they are on the same level, like you see in this kind of scenario now, you can see that these are on different levels. Let me draw from here to here. You can see from here to here they are on different levels, but here you can see that they are on the same level. You don't take it, you let it go. So in a situation whereby they are on the same level here or on the same level here, you don't take it, you let it go, you forget about it. So basically, is how you can actually use hidden divergence to be profitable in the market. Is how you can actually use hidden divergence to be profitable and milk the market. Okay, let me just take this last one. You can see this. You can see this from here to here. Then you can also see this. See this also. So, and the market went and plummeted up, but you can just take your trade once you enter here. So what you do is you wait for the stochastics to cross. The moment it crosses themselves, touching this line, this 20 line right here, or if it's in the sell market, you touch the 80 line right here, you place your buy or your sell, then you exit at the next overbought or oversold level. So that's how you can actually make use of hidden divergence with the weekly Fib strategy. So if you're new on this channel, I advise you subscribe and also click the bell button. And if you enjoy this video or strategy, please do share with your friends, and also check back for our weekly updates so that you can be profitable in the markets every week. I remain your boy Leke, Cosby Finance, and I'll see you in the next video. Bye for now.